So we were on track to have a big bull day, but now we've had a pretty sharp sell-off here into the end of the day. So looking at the daily chart, you can see the bears have been able to create this big tail on the top of the chart. Then if you look at the 24-hour chart, here's the 24-hour chart. We're basically down to a doji with a fairly small bull body now. So the buying dried up. I mean, my thinking is that we were coming up against this moving average, and we're just in an environment where rallies aren't going to be too strong. It was looking strong, and then clearly the evidence is that bulls are not holding after long rallies like this. Bears actually had quite a bit of control, about 10, 15 bars down with very little pullbacks until here. So, but most of the day was spent going up. So let's look at that. 2 bars up, 2 bull bars, fairly large compared to prior day's price action. Whenever you see a gap down and then 2 bars, a lot of traders will look at buying above those bars and trying to do a swing trade. And this is one of those days where that would have worked out very well. So 2 bars, and then this 3rd bar is where I would consider actually, the 2nd bar is okay, but the 3rd bar as well. This is okay for trying to do a scalp or a swing trade. So I think swing trade's better in this case because you have so much opportunity. But once you have two bars and then a smaller bar like this, but it's still a follow-through bar, then that's even making the case stronger for the bulls once you get this 3rd bar. So that's why I have that marked as a buy. And like I said, you can scalp. I think it's better to be trying to swing trade at least 2 times your risk and trying to get out around the close of yesterday, at least that. When you have these kind of days, then when you have multiple bars up like this on the open, there might be a little bit more up, but there might be a lot more up. It might end up being a huge bull day, and this is what those swing traders are hoping for. So they're willing to be wrong several days in a row to catch a day like this. Market's moving higher, hasn't quite touched the open yet, but let me get this double bottom. And these kind of pullbacks, this is very common on a day when there's a gap down and then 2 bull bars on the open. You'll see these pullbacks that look like the market's going to reverse. It tricks traders into exiting their longs, and then the market continues heading higher. I've seen this a lot. It's definitely something that catches my eye. So when you get 2 bull bars in the open, then look for these little pullbacks and look for those to fake out the longs. So in fact, it'd probably be okay to be trying to buy even at the close of this bear bar, trying to buy that. After the double bottom, you have this bull bar closing back above the moving average, and now you've had bears failing twice to go lower, and so I have that marked as a buy. And really, either of these follow-through bull bars as well are also buys. And like I said, like these trades are okay for scalps, but the potential is so large for more up. So I think swing trading is better, just because if this day is going to go higher, then it could go a lot higher. Zooming in a little bit, micro double bottom, bull bar, good to be buying above that. And I mean, what's going to be the common trend here? It's that the market's going up, so we want to be looking to buy. So really, any pullback that doesn't look too strong, and then you go to bull bar, you can be buying above that. Like this bull bar here, I don't have it marked, but I don't have it marked because it is following 3 bear bars, so there might have been a little second leg down. But if you're taking a swing trade, you know, and you're going for 3-4 times your risk and trying to get out somewhere up here, then the way you've structured your trade is going to offset the lower probability. So I'll draw that in. There's 2 times. Then going for 4 times. So 3 bars down, probably a little second leg down. But sometimes not. Sometimes it's going to end up rallying strongly like this. So by structuring your trade in this way, then you are able to take that. I don't think the odds are high enough for a scalp though, so I don't have that marked there. This one is better because now we've had the market pulling away from the moving average a little bit, and then this bear pause here, and then a bull bar close on its high. So I like the idea of buying above that for a scalp. Breaking out above this high, and then pull back, double bottom here, first test and then second test at this breakout point, buyers above that, both for a scalp and for a swing trade. Before I discuss this, I wanted to bring up one more little thing that kind of caught my eye today. As the market's moving up, what is this in terms of the market cycle? So these first four bars, this is the spike. And what happens after a spike? That spike turns into a bull channel, which we got here. So spike, bull channel. Then what usually happens after the channel phase? We turn into a trading range. And this sell-off has been fairly strong, but if you just look over here, you could say, yeah, the trading range actually started over here at this point. It started here. We've gone up a couple times, had a couple legs up, then a couple legs down. And we're actually in this trading range that's in this area. So I'm bringing that up because I was looking at these two bars here, these two inside bars. Market's moving up fairly strongly. You get a bull bar that's fairly large later in this trend that's been happening, and it's fairly large compared to these recent bars. Then instead of getting a second bull bar, you get this inside bar here, this bear doji. So when we're looking at the market cycle, we get a spike, channel, and at some point this is going to turn into a trading range, usually. Now today that rally continued up in a fairly strong trend. But like I was saying, the trading range actually did start over here at this point. So even though we did get a strong rally, that pulled back into this area of the trading range. So I'm bringing this up because I don't think inside bars or outside bars are really talked about enough. And so we have a strong bull bar, but the next bar is this inside bar. And it's an inside bar after we've already had a decent size moved up. Then we get a second inside bar, this bull bar. So now we've had two inside bars. These are sideways. So instead of the market going up, now we're going sideways. And the specific pattern I'm trying to get at here is we have a bull bar that's fairly large late in the trend, and then an inside bar and another inside bar. This often leads to the start of a trading range. So I thought it would be okay if someone had sold above this bar, this bear bar, or even above the high of this bull bar, because there was a decent chance that this would be the start of that trading range. Now you can see if you sold here, you would have been able to scalp out here, or if you sold above the high of this bar here, you would have been able to get out on this pullback. Now, as we can see, the market rallied up pretty strongly, and we got plenty of buy signals that would have told you need to get out of any shorts. But what some computers are doing is they're selling in this area, and they're willing to scale in higher. And then we can see this is, in fact, where that trading range started. So I just, when it was live, I noticed this, and it got me thinking about, is this the start of the trading range? And, of course, now we can see that is where the trading range started. So be on the lookout for little patterns like this, big bar late in the trend, and then an inside bar, and then another inside bar, because that means the bulls are not as strong and the market's starting to do something different. Now, looking at this sell-off, I would not have expected the sell-off to be this strong. Turned out to be about 15 bars with very little pullback. Clearly tight channel down. The only side making money is people selling. Well, one thing, when you get this, you often get a second leg. So pull back, second leg. And then the buyers start to step in after you get that second leg, because they're looking to resume the trend again. So when they see these deep pullbacks like this, they'll wait for that second leg, And then they'll say, well, let's start buying again and see if we can move the market up. Maybe bears have had enough profit. They sold this close, pull back, and then they're trying to exit at their first entry, and then the bulls will look to buy again. Breakout of this trend line up. So when you get that first breakout of the trend line, you normally expect the market to come back up and test this high. Probably 75% of the time, it'll try to come back up and test this high. Maybe go above it, or maybe it'll undershoot it a little bit, but it'll be close enough that it's clearly a test of this area. And you can see so far we haven't gotten a test of this area because this was such a sharp sell-off that might need more time before a test happens. So what about selling during this? So on the 5-minute chart, I struggle to be selling during this because we were so strong here. And like I said, we are expecting a test up of these highs to happen. So even though we're fairly strong, I would not be too eager to be selling. What someone could do is trade small and sell somewhere in here, probably after we've already broken down below the moving average. Sell somewhere in here. And if the market keeps going down, good, you take your scalp profit. And if not, then you scale in higher. So you'd sell more above a bear bar somewhere up here. And that's okay because of the market cycle. Spike, channel, and then we expect a trading range after that channel. So if the market is going to come back up and test the high, that's probably just a test of the high before resuming the trading range. So I'd rather not be taking like a full position size shorts during this, but I think if someone's trading small and with they're willing to scale in, then I think they can make that work. When you have a sharp move like this and then a pullback, one way you can use this pullback for information is to try to draw a measured move. And a measured move off of that pullback can give you a target for the bottom of that move. So we have the high, market's moving down, and you want to try to look for gaps or for pullbacks. So one, you can see here the low of this bar and the high of this bar do not overlap, so there's a gap there. So by the close of this bar, you could draw in this measured move like this, and you'd have a target here. Another way you could do that is draw it from this high to where this pullback leads to, and then that would put your measured move further down here. I mean, either is going to be okay. You can continue to expand your measured move as the market's moving down. So if the market, let's say it double topped here and headed lower, I would try to look for a measured move, something more like this. So the high, then to where we have this body gap right here in this area. There are no bodies right here. Then I would look for that range to double in size in. So that would be another target created there. And I'll draw that measure move back on again. And if people that are drawing these measure moves, you often find support at those measure moves, especially after we've had such a strong bull day. So measure move target here. And I'm going to go ahead and draw in a measure move for the whole day. And there's confluence there. So the 50% pullback of the whole day puts us right here, which is right where the market bottomed. So you have confluence of a measuring gap right here, and then also the 50% pullback. And, to me, it's no doubt we found buyers here. We were expecting buying to happen to come up and test this channel, which might be occurring now. And then we also had these support levels. Another measure move I wanted to talk about that I had drawn in earlier is the measured move that led up to this high. So not only did this end up being a 50% pullback here, but you could have drawn this in earlier in the day. So let me show you how. So here we can see you'd have your trend line in, the market's moving higher, we're getting higher highs, higher lows. And as the market's doing this, you want to try to figure out where the high might be. Now, if the market's trending, you really want to spend your time thinking about how to get in the direction of the trend. But it's also important to look to try to find the support and resistance levels to see where that market might stall, and maybe there might be confluence of where there might be sellers in a bull trend. And when you're doing that, you put your measured move at the low. And then whenever you see these little gaps, that's when you put the middle of the move there. So we have this high, break out of the high, then pull back, and we have a body gap right here. So one of my first measured moves is going to be right here. You can see market hits that measured move there. Okay, so what's next? Probably this next level makes a lot of sense. There's a gap here, and look how the market broke out and came back and touched it and confirmed this support level. So test, 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 and the market's moving higher. So when you're look somewhere in here, and then you see all these tests of this level and this gap in here, then I'd be putting my measured move at that level. And that is exactly where the market went to today. So try to find your measured moves when the market is moving in one direction. Focus on trading in the direction of the move, but it's important to know where that trend might be losing strength. Looking at the daily chart, the bears are going to have they've been able to create a decent tail on the top of the bar. It's still going to be a bullish bar, but it's not as strong as it could have been. Trend line, and we had a trend line break a couple weeks ago. Now, the market is trying to make a major trend reversal. Major trend reversal. That's what it's attempting to do right now. So major trend reversal, we've had a trend. When does the trend end, or when is there a good chance that the trend might end? After the trend line break and then a retest of the lows. And then the bulls see if they have an opportunity to buy and move the market higher. I think they need more bars. They've only been 10 bars after this breakout of this. They probably need about 10 more before making a chance of resumption, because they need to make sure the bears aren't going to start selling aggressively again, because they don't want to be buying here below the moving average if the bears are going to be able to sell and break out here and go lower. So we probably need about 10 more sideways to up bars. And so just looking at that might put us around April 12th. Just if I'm assuming it's going to be 10 more bars, then probably around April 12th. And it could happen tomorrow. We could break out strongly tomorrow. But just based on the normal amount of bars you need for that major trend reversal, I'd be guessing around 10 more bars. And at that point, you can assess how strong the bears are and how strong the bulls are. And that's when the bears would give up and the bulls would rally, or the bulls would give up on trying to go higher, and then the bears would start selling again. So that's really what all this is. The bears were strong, but then they took profits, and now both sides are just in this type of trading range until we can see, are the bulls weak and then the bears can start selling again after the pause, or are the bears weak and the bulls will start buying again and maybe move us up to a 50% pullback of the move to start. But if it's really a major trend reversal, then we'd be looking at trying to test the all-time highs. I'm still more bearish, even though we're trying to create a reversal here. We have not actually created it yet. Like I said, we need more bars. And even if we do go higher, I will not expect us to continue rallying strongly up and go up to like 7,000. I think best case for the bulls is we're going to be in a trading range for a few more months. So, I'm not too bullish. I would rather be more on the bearish side. So that's my take. Hope that was helpful. It was kind of a fun day, trending strongly, and then that was kind of surprising to see this. I was saying it was difficult to try to find a short on the 5-minute chart, but when you're seeing this move down, look And if you want to get short, we'll consider looking at a lower time frame, like a 2000 tick chart or a 30-second chart, and then look for a little pullback, and then try to take a swing trade below that. And I think that's a better way to do it than you're still allowing yourself to have a structured stop loss and profit target. So let me just pull it up. And my chart was somewhere else. So here's this pretty strong sell-off we've had. And when you're seeing that on the 5-minute chart where the market's just, we had 5, 6, 7, 8 bars in a row. When you're starting to see that, but you don't want to get short, you're not really seeing entry on the 5-minute chart. Well, try to look for entries on the tick chart. A little pullback, bear bar closing on its low, go for 2 times your risk. Pullback, bear bar closing on its low, go for 2 times your risk. Doing this works better in a tight channel like we had here. It's a little less reliable and just like a trend, but when the channel is tight, then you can really find a lot of these little pullbacks on the 2000 tick chart, and you can really have a good time doing that. So yeah, that's all I have for you guys. If you have any questions, let me know in the comments. I'll be happy to answer them. So see you next time.